Well, good afternoon. Thank you so much for spending your lunchtime with me. I do appreciate it. Once again, my name is Elissa Moore. I am the Education Coordinator and a Certified Housing Credit Counselor with Housing Credit Counseling, Inc. here in Topeka, Kansas. We are going to be talking about credit today. I need to thank Ann and Carrie for inviting us out to do this. I'm very happy to be here and be able to spend this time with y'all. Just to get started, I want to tell you a little bit about HCCI because, you know, we're a nonprofit. We have to advertise ourselves. So wanted to let you know that we've been around for over 40 years, which is a very long time anymore for a nonprofit. As I've stated, we are grant funded. We also take donations, but the majority of our money comes from HUD as well as United Way and some other grants that we apply for throughout the year. We started out in 1972 with tenant landlord counseling. I'm happy to say that department is still thriving today. In fact, they just received a grant last summer to enable them to not just serve the 22 counties in Northeast Kansas that HCCI serves, but KHRC provide them with a grant to serve every county in Kansas. So they're getting calls from all over the state now regarding tenant landlord issues. So we're very proud of them for being able to obtain that. That says a lot about our credibility, I'm sure, if we were able to get that type of grant. Tenant landlord counseling involves people calling on the phone sometimes. They have a concern regarding their rights. There's a piece of legislation out there called the Kansas Residential Tenant Landlord Act that's in effect. And if you've ever tried to look at a piece of legislation, there's a lot of legalese in it, very difficult to sift through and understand. So what our tenant landlord counselors have done is put it into easy understand terms in two different handbooks, one specific for tenants and one specific for landlords. And that's actually free to download off of our website. So if you ever have questions, if you're in a situation or you know of somebody else who's in a particular situation, whether they are a tenant or landlord, I encourage you to go to our website first and take a look at what we have to offer there. If you still have questions, feel free to get our tenant landlord counselors a call. If you need to be seen immediately, they do take walk-ins as well, because they know there's usually an immediate need when people have those types of concerns. We also offer home buyer counseling. Usually there's people who get to that point in their lives where they're tired of renting and they're ready to own their own home. Well, there's a lot that goes into that process in general. And so people like to come in and possibly meet with us, and we take a look at their budget, pull a credit report for them, because if you've ever been through the home buyer process, you know there's a magic score for whatever type of home loan you're trying to get. So it's always a good idea to kind of know what you're getting into before you do fill out all that paperwork, that loan application the first time, and possibly get denied. So we encourage people to come in and see us for that. We also have a wonderful program established here in the Topeka community. It's called TODO. Have any of you ever heard of the TODO program? Okay, it stands for Topeka Opportunity to Own. A person who is eligible for that program, because it is based on income, would only have to put $500 down on a property that's $65,000 or less within the Topeka city limits. They also receive money to rehab that home, because most people, when they're buying a $65,000 home, it's usually an older home. So there's things that are going to need to be repaired. And Capital City Bank and Federal Home Loan Bank and a couple other banks here in town actually partner with HCCI to help out with what's called a soft second mortgage. So in order to do those repairs, they might give you up to 20 grand to be able to make sure the roof is in good repair, the HVAC system's working correctly, the windows, you know, are going to be good for weatherization and everything else. And then you don't have to pay anything on that 20 grand the whole time that you're in the home. However, if you stay in that home for at least 7 years, you no longer have to pay back the full 20 grand when you sell it. You only have to pay back $7,500. So it's a wonderful, wonderful program. They've closed on over 200 homes now, and it started in the mid-90s. So it's still thriving and going very well as well. We also offer consumer credit counseling. It's probably what we're best known for now. We see people talk to them about their finances, their income, their expenses, what they can do to possibly increase their income or reduce their expenses. We can also pull credit reports for individuals, review it with them so they know where they stand and how to improve their credit as well, which is what we're going to be talking about today. Also, if you currently have a mortgage and you're having difficulty making your mortgage payment, there is the option, instead of having to go through foreclosure, to do possibly what's called a loan modification with your mortgage company. And it's a pretty tedious process, so we just kind of are there as a support, another pair of eyes as you're filling out the paperwork, and make sure that paperwork gets to where it needs to go, so you're not having to constantly go back and forth with your mortgage company. And we'd be more than happy to meet with you for that as well. We also offer student loan counseling. Anybody in here currently have a student loan they're paying back or needing to pay back? Okay. Well, a lot of people don't realize that they have other repayment options available other than the one monthly payment that comes in the mail after your grace period is expired or you come out of deferment. So what we do is we meet with individuals, take a look at their budget first, and then ask them to contact their loan servicer while we're in the office with them. So once again, we can be another support for them. And then they can learn what their repayment options are. And they might be paying significantly less than what they were paying as a result of making that call. Now, you can always make that call on your own. You don't need a certified housing credit counselor there with you. But there are some people that are a little bit leery. They don't really understand how the whole process works. And so that's why they come in to see us. So please don't hesitate. If you ever have questions regarding your student loan or you want to come in for one of those appointments, just feel free to give us a call. Our counselors would be very happy to meet with you. And then finally, we offer education. So I get to go out in the community and meet with folks like you all the time. And we talk about topics like budgeting, credit, identity theft, student loans. We also have home buyer workshops throughout the year that are free. And they are taught by the person who's in charge of our TOTO program, Chris Burke. So I encourage you to get on our website, check us out, see if there's anything else on there that you might be interested in learning about that we have to offer. Also, if you belong to a church or organization, Rotary Club, and would like us to come out and visit and just provide you with a general overview of what we have to offer, we'd like to do that as well for you. We have offices in Topeka, Lawrence, and Manhattan. Like I said, our office started in Topeka in 1972. But if you have individuals that live out by Lawrence, Manhattan, or in our 22 county service area, but they're maybe not able to physically get into an office to meet with one of us, they also do have the option to do counseling sessions over the phone, via email or online. So hopefully people won't hesitate to give us a call when they have questions, or especially if they feel like they need some counseling. And we always encourage people to be proactive rather than reactive. So when you see things kind of start and go kind of wonky in your life, feel free to give us a call, okay? It's much easier to catch things when they first start kind of rolling than when they're already there, you know. Our mission is to counsel and educate all people to achieve their personal housing and financial goals. And just to let you know, there was a survey that was done by a National Foundation for Credit Counseling, which is who our counselors are certified through. And they performed this survey back in 2014, and they found that more than half, or 61% of U.S. adults admit that they do not have a budget. I'm not going to ask if any of you have a budget in here, because I don't want to do that to y'all. But a third of U.S. adults, or more than 77 million Americans, do not pay all of their bills on time. Have you ever been there? I have. I mean, that's just kind of the way Americans are. And then 34% of adults carry credit card debt over from month to month. How many people in here currently have credit cards? Okay. Some of us probably suffering with some pretty high debt from credit cards, because that just tends to happen when we have them in our possession. So these are the topics that we're going to discuss today. Credit reports, credit scores, effects of credit on you, how to build your credit up when you're first starting out or rebuilding it, and a little bit on identity theft. By law, you are allowed to pull one credit report from each credit bureau one time per year free of charge. As it states up here, Experian, Equifax, and TransUnion are the three different credit bureaus. And then you can go to what's called annualcreditreport.com to pull all three of those credit reports free of charge. The reason why we direct people to go to that particular website is because it is free, it's safe, it's secure, and it was developed by the Federal Trade Commission. You can't get any more secure than that when the law changed. So that's why we ask people to go there for it. You can also pull your credit report free if you've ever been denied credit. So if you've ever applied for any type of a loan and you got denied, and I'm very sorry if you did, it's happened to me too. But if you've ever gotten denied, usually you'll get some type of a letter in the mail from that lender stating, okay, well, we're not going to be able to allow you to borrow from us at this time. By law, they don't have to tell you what criteria they used to make that determination. However, by law, they do have to provide you with the name of the credit report that they use, the credit bureau. So then at that point, you could send a copy of that letter to that credit bureau and they'll give you a free report. That way you can take a look at it as well. You always want to make sure once a year when you're entitled to these free credit reports that everything on there is correct. Okay? You want to make sure that you're not the victim of identity theft. You want to make sure that things that are supposed to fall off have fallen off in the right time period. Also, you can possibly get a credit report free if you are unemployed and actively seeking employment. Same kind of deal. The reason why you'd want to check that is to make sure that when employers are checking your credit report, that everything on there is correct. Okay? So what's in your credit report? When you first look at your credit report, there's certain things that you're going to see. It's going to show your personal information. You do want to look at this. You want to review this. It's going to show any name you've ever had credit pulled under. Okay? So if you were married and now you're back to your maiden name again, or you used a middle initial one time, make sure that middle initial is correct that's showing up. Also, it's going to show your addresses that you've lived at when you pulled credit. So if you got a car loan when you lived in an apartment and then you moved and you got a home, and it's going to show all those different addresses, but only from when you pulled credit. And that includes when you got a credit card. So you could have up to 3 addresses showing at one time. And it will also show any employers that you happen to be at when you had credit pulled on yourself. Next, we are going to talk about trade lines. Trade line is every creditor that's showing up on your report that day that you pull it. Okay? So it's going to show installment loans. These would be like student loans, auto loans, anything where you make a set payment and you know exactly when it's supposed to be paid off is an installment loan. Also, it's going to show any credit cards that you currently have open. Unfortunately, if anything's ever gone to collections, that's going to show up as a trade line too. And it will show your public records. If you have filed a bankruptcy within the last 10 years, when you pull your credit report, that bankruptcy is going to show up on there. And like I said, it will remain on there for 10 years from the date that it discharged. Also, for public records, if you've ever had a garnishment, somebody's put in a judgment against you, those judgments stay on there for 7 years from the date that it's paid off, and tax liens show up under public records as well. Additionally, if anybody has checked your credit, that's going to show up. Most time you've signed on the dotted line allowing someone to check your credit, okay, for like a home loan, a credit card, auto loan. However, sometimes if you have things in collections, you're going to see other names on there as well. And the reason why those other companies are looking for you is because they want to possibly start garnishment or, you know, to do a judgment. So you got to be very careful. Let's see. This is information that is not in your credit report. So anything has to do with your medical history, if you had a checking or savings account, unless if it's gone to collections, that's not going to show up. Also, your civic or political activities and your religious belief is nobody's business but your own. If you were to pull your credit report and you see information that you know is incorrect, by law, you can dispute that information free of charge. Be very careful of commercials you see or advertisements that you see online that say that they can repair your credit, that they can get the negative information removed. That's false. Anything that needs to be corrected, if it's legitimately wrong, you can do on your own free of charge. And this would be the process. You would want to fill out a dispute form. You would want to find the supporting documentation to show that you either paid this debt off or that it should have fallen off by now. And you would want to send that certified mail to that particular creditor. Why do you think you'd want to send it certified mail? Verify they received it and make sure they get it. Absolutely. The last thing you want is to go to all this trouble, send it off, 30 days later you haven't heard anything, and you call them up and they say, we never got anything. You have that certified letter, that card that comes back, and you can go, oh yes, you got it. And then they only have so much time to either correct it or delete that information, 30 days, okay? And then 2 months later, if you want, you can pull your credit report again, make sure that it did correct it and it has been either changed or erased off of your report. To tell you a little bit about credit scores, when you pull your free credit reports, there is not going to be a score on it. And I know that's why a lot of us like to pull our credit reports, because we want to know what our score is, right? So unfortunately, that's not the case. Your score does not automatically show up on your credit report. However, if you did come in to see us at ACCI and we pulled your credit report, we can share your score with you. But just know that more than likely, even if you go to annualcreditreport.com to pull those reports, they're going to charge you a fee. I believe it's like $7.99. And if you go anywhere else, you're going to have to, pay a fee for it as well. But it says they can be purchased from places like myfico.com. Okay, so there is options for you to be able to find out what your actual FICO score is. Yes, sir.
Why is it a secret?
Why is it a secret? Because they know you want the information. Oh, and you know how that works. If you want it, they're going to make you pay for it, unfortunately. It's also important to know that you are never required to pay any type of credit protection, fraud protection, any type of monitoring on your credit report, you should never have to pay for that, okay? It's never a requirement to get your credit report pulled. I know that some places that advertise on TV, they'll say, you know, give us, you know, your credit card number and we'll monitor you for fraudulent activity, you know, every month. And they're actually charging your credit card, you know, $15, $30 every month to do that. And that's really not necessary. When it comes to interpreting your score, there are different models, scoring models that are out there for you. The most common one is the FICO scoring model. It's developed by the Fair Isaac Company, and it is on a scale from 300 to 850, obviously 300 being, you know, pretty low down there, 850 being the best. The highest score that I've ever seen come through the office on my own as a counselor was 815.
811.
811? Mm-hmm. So it is possible to get over 800. Also, the Vantage score, this is a newer scale that's out now, and it's on a scale from 501 to 990. The difference between this one and the FICO score, other than the scale that they use, is that it's more like an academic scale. So they're going to grade you. They're going to let people know, okay, well, she's got an A rating, she's got B rating, F rating, you know. So if you ever see something like that when your credit report is pulled, that's what that stands for. Different credit bureaus use different types of scoring methods, okay? And all scores should represent close to the same lending risk. So if Experian uses one particular scale and TransUnion uses a different, they should pretty much match up. Know also that between the 3 different credit bureaus, it is possible to have 3 different credit scores. Have any of you ever noticed that? Okay. The reason for that is not that somebody is not doing their job. It's that creditors do not have to report to all 3. It's not a requirement. So they're going to take the lazy way out. They're not going to report to all 3. So usually that's why the scores are different. Now, you still need to be diligent, and you still need to make sure if there's similar information on each credit report that that information matches up. Okay? Probably the biggest question we always get when we pull a credit report, well, what does it all mean? How do they come up with this little 3-digit score? And it's all laid out here for you. 35% of it has to do with your payment history. So how well do you make your payments on time? 30% of it has to do with amounts owed. So where are you in relation to your credit limit? Are you all the way up at your credit limit maxed out? Are you way down at the bottom? Those affect your credit score. 15% of it accounts for length of credit history. So your credit's probably going to be significantly different from someone who's just coming out of high school, purchasing their first vehicle. They're going to have a much higher interest rate right out of the gate than you would possibly, depending on what your score is. And the reason for that is because you start leaving breadcrumbs the minute that you take out credit the first time. So they're watching you, okay? So every little thing that you do, whether it's right or it's wrong, is going to have an impact on your credit score for years to come. 10% of it has to do with new credit. So anytime that you get a new credit card, take out a new loan, that's going to impact your score a little bit. So you always want to be really careful, especially if you are looking for a new car. I highly encourage you to go to multiple dealerships within the same weekend if you're going to have your credit pulled at these different places to see where you can get, you know, the best deal or what have you. The reason for that is because if you do it all in the course of like a 3-day period, they only count it as one hit, okay, one hard hit. If you were to go to one dealership one weekend, you wait 3 weeks, you go to another dealership because you found another car you like that's similar to that one, and you're trying to get a better deal, it's going to start hurting your score because then they're just ding-ding-dinging you. Okay? And then 10% of it also has to do with types of credit used. So they want to make sure that you're using credit, okay? You have to use credit in order to build credit and improve credit. You got to play the credit game, unfortunately. But they want to see that you have, you know, possibly an auto loan, installment loan. They want to see that you have credit cards, okay? And they want to see how responsible you are with making all those different types of payments. They're putting this all together. They know what they're doing, okay, when they're deciding whether or not they're going to lend to you by looking at this particular score. Another thing that I'll add for new credit is that you have to be really careful around the holidays. How many times have you gone through a checkout and at a retail store and they say, hey, if you sign up for a credit card today with us, we'll give you 15% off your purchase. Anybody ever experienced that? Okay. Well, it's really easy to do, right? Just fill out a little thing and then boom, you get your 15% off. They're also dinging your score every time you do that. So just be really careful when you're taking out that new credit at Christmas time. This is a complete breakdown of the FICO score, like I was mentioning. The payment history, if you're 30, 60, or 90 days late it's really going to have an effect on your score. And if it's on an installment loan that you're late on, it's going to even impact it more. Okay, so if you're late on your student loan payment, if you're late on your mortgage, your auto loan, that's going to have a significantly more of an impact than if you were late, possibly like with a credit card payment. Okay, so it's a matter of prioritizing, know what needs to be paid if you want to keep your credit score looking good. New credit types of credit, like I said, were 10%. Avoid opening multiple accounts at a time, and have a good credit mix. Okay. Length of history. It's not always in your best interest to close accounts that are in good standing, and I have a great example coming up to show that. But just to kind of offset that, we have individuals that come in, we pull their credit report, and they have all these wonderful accounts open, and it says they have 80% credit available to them right now that they could just tap into if they needed to. And then you get into the meat of their report, and the reason why they have so much credit available is because they're not using it. Now, if you are a lender and you're going to decide whether or not to allow someone to borrow money from you, do you want to look at somebody who's not using credit? You have no idea what their payment behavior is, if they pay their bills on time. No, it's going to be a difficult decision to make. So what we encourage people to do is, if you have, retail accounts open, to just put something small on them every 4 to 6 months. You pay it off immediately. You don't have to max your cards out for them to show up on your credit report. But that then lets a lender see what your behavior is. Oh, okay, this person, they're very responsible. They're not taking it out every weekend, using it, and having these really high balances. So just know, like I said, you're going to have to pay the credit game if you want to have a decent score. And then amounts owed represents the outstanding debt balances. Just know that anytime you take out a new loan, for instance for a car, that your score is actually going to take a hit for a while. And the reason for that is because depending on where you're sitting as far as what you owe to what your credit limit is or how much you took out your loan for, if you're more than 20% of that overall credit for that creditor, it's dinging your score too. Okay? They're saying that you shouldn't be using any more than 20 to 30% of your credit with each creditor at any given time, which doesn't sound like very much, does it? So if you had a credit limit of $1,000 on a credit card, they're saying no more than $200 on that credit card at any given time. Okay? That's what lenders are looking for. That's part of their criteria when they're making their determination, and it's also something that can affect your credit score. So this is the example I wanted to share with you. So you have a person that comes in. They have 3 credit cards. 2 of them are maxed out, 500 out of 500. And then you have a credit card that's in the middle that says $200 is all that's left to pay off on it, okay? And then that sucker's going to be done. You have the opportunity to either close it, you can use it, for something else if you want to. So this person says, well, is it going to hurt my credit score at all if I were to close this one? If I had that $200, I got my tax refund, I'm just going to go ahead and pay it off and I'm going to close it. By looking at this scenario, do you think that could impact them at all? Okay. Does anybody want to share why?
Because when you close an account, they don't see any history in it, and it reflects negatively. Because it shows your amount of time you've had that card. So if you've had a card for 10 years and you decide to close it, it's going to show that it's closed. I mean, that's not going to count towards building credit. It's just you're just making a payment on it. But the account's closed, so you're not building history. The length of history, and they're also not seeing the payment history.
That's correct. Now, it will stay on there for 7 years from the date you pay it off, but you're right. You no longer can use that account. It's not helping you credit-wise. And in this case, because this person got rid of that card completely, it actually is showing now that they're using 100% of their credit. So that's really going to significantly impact their credit score as a result of that. And a lot of people don't think about that. That's why we say, if it's something that you can put something small on every 4 to 6 months, keep it open. If it's something like you got a piece of jewelry at a jewelry store and you took out credit on it, it's paid off now. Are you going to go in there and be able to buy something small, put it on there, and pay it off fairly quickly? Most times, no. Do you want to spend another $100, $200 on a piece of jewelry just to keep a credit card open? A lot of us don't. It's a little bit tedious. So you can go ahead and close those accounts. Just look at your whole report before you do it. If that's the only one that's paid off and the other ones are maxed out, then it doesn't do you any good. Leave it open because you're able to use the money for that credit limit. Yes?
Is it better than instead of closing that account, can you not just keep the account open but cut up the card
yeah.
Not using it at all
Sure.
versus closing it? Wouldn't it be better just to close it and not use it? Or, I mean, not close it, but just put it
Right.
up and not use it, leave it open?
It's very dependent on your personal lifestyle. Also, for security reasons, if you're not using an account, you know, and you have the ability to close it without hurting you. You know, you have a credit card sitting at home, make sure it's locked up, and make sure you're monitoring your report. That's all that I would say. If you're using it, you know, regularly, then, you know, and you're keeping it on your person so you can keep track of it, I get worried about people come in and they do what are called debt management plans through us, where they consolidate their debt into one payment that's paid to us, and then we pay it to all their creditors. One of the things that they do while they're there is cut up their credit cards to ensure that they're safe, they're secure, and, you know, they're gone, more or less. So just be really careful. Make sure that you're not compromising your security by putting it up somewhere in your house. There are effects to bad credit. In this example, they have a 36-month car loan. They took out $18,000 for that loan. Now, this is when it gets kind of squirrely. You have a person who has a credit score of 695, and then the other person has a credit score of 600. Do we see any differences in the interest rate? Yeah. And as a result of that higher interest rate, their monthly payment is going to be higher, right? So it begs the question. So are they going to be paying more over the time of that loan? Well, heck yeah, they are. Look how much more. $3,060 as a result of just your credit score, because your interest rate is based off of that credit score. So that's why it's always a good idea to just, every once in a while, you know, I know it's hard to pay that money, but make sure that your credit score is sitting where you want it to. Other effects of bad credit, in addition to paying higher interest, it might limit opportunities that you might get if you had you know, a higher credit score. They don't extend 0% interest, you know, for 3 years to a person that has a low credit score. You know, it's not for everybody. It's even in the little fine print at the bottom of the commercial every time. It's going to make it so you only get lower credit limits. So if you were to apply for a credit card, if your credit score is lower than somebody else, it's possible that you're going to be getting maybe a $300 credit limit as opposed to a $1,000 credit limit starting out. And just know that anytime you have a delinquent payment, that it's going to stay on there for at least 7 years from the date that that account is paid off. On your report, they actually keep a running tally that says 30, 60, 90 plus. And the reason why they keep a running tally is because you might have an account that's been open for years, since the 90s or something like that. It was a credit card. And maybe back in 1995, you became unemployed. And you had, well, not that long ago, I shouldn't say that. But maybe 6 years ago, you became unemployed. And you had difficulty making that payment. You're up to date now, using your credit cards just fine, you have your full income back. But back then, maybe you missed 2, 3 months in a row. A lender can only see month-by-month activity for a 3-year period. So they don't know what happened, you know, 4 or 5 years ago. So that's why they keep that running tally. So they know when they're looking at your report. And they might ask you about it too. You know, what happened? I can see that you have impeccable credit now, but what happened back then? They want to be as nosy as possible before they lend to you. It can also impact your employment, your ability to possibly get a piece of property in the future, a rental, insurance. One thing you need to know, your homeowner's insurance premiums and your auto insurance premiums are based off of your credit score now. Were all of you aware of that? Yes. I always feel bad for my bankruptcy clients because they're already coming in there, they're filing for bankruptcy, or they're going through bankruptcy, and I bring this up in the bankruptcy course, and I could just see their face go, because you're already down, and it's just like they're kicking you a little bit more. Because there's nothing you can do. Once your credit score is down, it's going to take a little bit of time in order to get it improved and get it moving in the upward direction again. If you have a significant life event happen to you, there's certain things you need to know. If someone were to pass away that you were living with, that you were married to, that you held any joint accounts with, do not be surprised if the creditor still wants to try and get that money from you. Okay? They're going to say that you're still responsible. I'm sorry you didn't kick the bucket too. We want our money. All right? As far as divorce, if you got a car loan when you were married and now you're divorced, and even if your divorce decree says that your ex-spouse is in charge of that car now, they're in charge of that payment, guess what? If they become delinquent default, do not make a payment 1 month, it's going to show up on your credit card as well. Because creditors do not let people off the hook that easily. I tried it. It doesn't work. I tried it. I sent the divorce decree in too. I said, he's in charge of this. And then you took out the loan together. You're both responsible for it until it's paid off. And so I was stuck with it. Just know that you can always contact your creditors and ask to separate the accounts. I mean, and by all means, I encourage you to do it. You just never know what's going to happen. But don't be surprised if it doesn't work out in your favor. The only way to build credit is to use credit. Always start small and build up. When I was much younger, first time we established credit, my ex-husband and I, was at Montgomery Ward's. That's where he purchased my engagement ring from. We had a $300 credit limit, and we had money left over after we purchased the engagement ring, so you can, yeah, exactly. So anyway, we have our credit card, and we're walking around Montgomery Ward's, and we're thinking free money. Back then, we're thinking gift card. We still have more money we can put on this stupid credit card. And that's what we did. We bought a Sega Genesis. Yeah, we loved it. He loved it. He loved Madden 94 and everything. Yeah, I won't go into that. But you just got to be really careful with credit cards, especially if you have young people who are coming of age, possibly going off on their own. Tell them about credit cards. Tell them, you know, this is not free money. This is not something that you can just go out and squander. You're responsible for this. They're going to want their money back. And the more you put on a credit card, the higher the minimum monthly payment is going to be. By law now, creditors have to put on their statements how long it's going to take you to pay off your current debt by only paying the minimum monthly payment. So it's always a good idea to try and pay just a little bit more each time. On-time payments on installment loans, like I mentioned before, just make sure you're making those payments on time because it can significantly impact your credit score, car loans and student loans especially. And then apply for a secured credit card, okay? A lot of our bankruptcy clients, they know they're not going to get approved for a credit card anytime soon. But you can get what's called a secured credit card, where you take some of your money, you go to a credit union, they allow you to open an account with that money, and they issue you an actual credit card from the credit union. Anytime you put something on it, then it's going to report to the credit bureau. So you purchase something that you're going to have to get anyway throughout the month, like a tank of gas, something that's small, something that's, you're not going over that 20%, okay, that you're not supposed to. And then you can pay it off each month. So then you're not even having to worry about paying interest on that money either. And that will help your score. That's what's going to help improve your score. So even if you are going through a bankruptcy, if you're thinking about filing for bankruptcy, it's not I have to get through my bankruptcy and then I can think about improving my credit. You can be starting to improve your credit the minute that you file. And when it comes to repairing your credit profile, when you're looking at, just make sure that you are disputing any information that you see that is inaccurate. Develop a budget and pay off your bills and always pay things on time. And then ask a friend or family member possibly to co-sign with you when you are trying to rebuild your credit if you're having difficulty getting a good interest rate. Just know that if somebody co-signs for you, that if you were to default, not only is the payment going to come to them, that they're going to be responsible for it, but also it's going to show up on their credit report as well. Yes, sir.
How does it help you by co-signing?
You can get a better interest rate because they'll go off the other person's credit as well.
Would it go off their credit or combined credit?
I would say probably combined credit. But more than likely, anybody who has a better credit score than you, if they're co-signing with you, is going to help you interest rate wise. As long as their credit's good. You know, don't pick somebody who's already got bad credit. All right, a little bit about credit and identity theft. Anyone with a social security number, unfortunately, can become the victim of identity theft. We see this become more prevalent around tax time. People will file their taxes, and then the IRS will send them a nice little letter that says, we've already sent you your tax refund. And so then they have to dispute that. Yeah, it happens. Unfortunately, your children can become the victims of identity theft as well. So you can get online and check the report as well, free of charge. Check your credit reports regularly just to make sure that there's no suspicious activity on your reports. And then flag credit reports if you have somebody that's passed away in the family, just to ensure that somebody's not going to try and use their social security number. Go ahead and contact the credit bureaus, let them know this person's deceased, and that way it won't go undetected for years and years. You have the option as well as a consumer to do what's called a security freeze. This is not a fraud alert. This is not, my identity's been stolen, I want everything to stop. This is being proactive. And there's, advantages and disadvantages to doing what's called a security freeze. What it is you are voluntarily putting a freeze on your credit. Absolutely nobody can look at your credit while there's a security freeze on it. Sounds like a good plan, right? It's a good safeguard, yeah. Until you want something, and then you have to pay to have the security freeze taken off. You have to pay to have the security freeze put on. So just know that if you go out somewhere and you see a heck of a deal on a car and you want to go ahead and purchase that car, you're not going to be purchasing the car that day. You're going to have to wait a little bit because you got to get that security freeze removed. But it is a good idea. If you think that somebody might be wanting to tamper with it, if you have a family member, a friend, ex, anything like that, then it's a good safeguard to have in place. By all means, you might want to think about doing it. You can protect yourself from identity theft. You can enroll in fraud alert messages. If you ever do become the victim of identity theft, there's certain steps that you need to take on your own. First, you want to get a fraud alert put on your credit reports. You just contact the fraud alert departments at the credit bureaus, and they'll do that for you. You'll also want to inform the creditor of the credit account that you feel has been tampered with. And also document any contact that you make, whether it's with the credit bureau, whether it's with the creditor. Know that there's usually a different process with each credit bureau or creditor, so you got to have that in place. And also keep track of everything that goes on, any correspondence, anything that comes in the mail, any discussions you have with them over the phone. Make sure you're keeping a log. Or you realize that your card's missing. Then there's a possibility that you might have to pay up to $50 if they do charge stuff on it. And people always look at me and go, that's not right. Why should I have to pay anything? I'm not the one that did it. I'm not the criminal. Well, let's put this into perspective. If you had a credit limit on that credit card of $10,000 and these wonderful criminals ended up maxing that card out, would you rather be responsible for $10,000 or $50? Yes, exactly. And if charges were ever made using only your credit card number and not the actual physical card itself, you're not liable for any of those charges.
Going back to that, so like internet purchases, would that apply to?
Yes, absolutely. And then here are the 3 different phone numbers that you could call if you need to put a fraud alert on your accounts if you are ever the victim of identity theft. All right. I'm opening the floor for questions. Hit me. Yes, ma'am.
Can you go to anything to get a secure credit card?
Can you go to any bank to get a secure credit card? I know of 2 here in the area that do offer them. You might try, if you are associated with a particular credit union, ask them first. If not, see if there's a way that you can get on with one of the credit unions in the area.
Okay. So it has to be a credit union.
It does. Okay. Is that true, Renee? That's what's always been in my experience.
We've only checked with the credit unions, but I would say any local bank would be a good place to
try.
start.
Okay. Yes.
Student loans, how do they look at those as far as, say you're in deferment
Mm-hmm.
and you're debating whether you're going to go back or whatever, they're in deferment. How do those work? How do they look at those? How do they score those when they're in deferment if you're applying for a loan, house, vehicle?
Sure. Well, they're going to look at how much you still owe. Okay, that is going to factor in to your debt ratio. But they're also going to see that it is in a deferred status, and while it's in a deferred status, you're in good standing. So it's no different than you making a payment in a lender's eyes. So it's perfectly fine. In fact, I would think they would see that as being proactive. You saw you weren't going to be able to make your payments, you took action, and as a result of that, you're not delinquent. Yes? Oh, sorry.
I have like an express credit card from college that I started like 8 years ago.
Uh-huh.
But to get it, it's just on my credit. But to get it back to use it, I have to run my credit again. Like, yeah, I don't know why.
It's still open?
Open. It shows up as an open account.
And you've contacted them and they said, well, we're going to have to run your credit again to make sure.
So I was like, well, I don't want to take that hit, but then I
Right.
also don't want to lose it if I have the history. Does that make sense?
Well, if you did want to
have my credit again.
right, and if it's showing as open, but you do want to use it again.
No,
You don't want to
I
use
don't care.
Okay, well,
But
as long
I
as
don't
it's
know,
sitting.
like, does that look bad that I'm not using that?
It just depends on the rest of your credit report.
Yeah.
I mean, it's adding to your overall credit. you know, that you have available to yourself. So it's a judgment call on your part. I mean,
Like, I don't care to use it. I mean, there's not an express here in town, so I don't really care to use it.
then you might just want to go ahead and close it.
Yeah.
Yeah.
It won't matter if I close it.
And you don't even have the card anymore? The physical card?
No, because I mean, it doesn't work stuff to get a new one. I have to run my credit.
Yeah. You might want to close it. Just to keep yourself safe.
Yeah.
Yeah. But like I said, look at the rest of your credit report. Make sure that you're not going to be injuring your credit score
Yeah.
if that's got a significantly higher credit limit.
Yeah, it's like really low. I mean,
Okay.
it was like, it's a student, you know, it's real low.
Mhm.
It's not a big deal. I
Yeah.
don't know if that even helps a little. I don't know, like if that helps a little bit. I don't know.
And you know, you're welcome to come in and meet with the counselor. And we can, you know, take a look at your whole credit report with you, and then you can make that determination and have, you know, make an informed decision at that point.
Yeah.
Yes.
So when you're checking your credit score the once a year, the report at the website,
Uh-huh.
that doesn't ding you, does it?
The free one does not.
Okay. All right.
Is it secure? Should you use the website or should you call for the credit reports?
I'm sorry.
Obtaining the credit report, should you use the internet or call?
That's up to you. You can use the internet. If you need to dispute information, you actually have the ability to dispute the information on your credit report when you're looking at it, when you're getting your free one. I've heard people say that they don't do anything with that information when you try to dispute it that way, but I don't know that for a fact. But you can, either way. I mean, they're both going to be relatively safe ways to do it. Yeah, that's why they allow you that opportunity. Yes.
What about websites like Credit Karma? Is that a reliable place or not so much?
Websites like Credit Karma, all that I say about those is just be very careful. Read all the fine print. You never should have to give your debit card or your credit card number to them. As far as the scores, we're kind of up in the air with this. We've had people come in, especially for home buyer counseling. They say, hey, I looked at this particular site. This is what it says that my credit score is right now. And then we run a credit report on them, and we pull from Experian, and it's nowhere near what they're saying their credit score is on the one that they pulled. So you just have to be really careful. We've also found that for some of them, they don't use a FICO score. They use what's called a FACO score. And we still haven't been able to determine how they come up with the score. We don't know if it's an average. And it's honest. It's spelled F-A-K-O. It's a FACO score. So, yeah. Yes.
How accurate is like Discover when they give you that free credit score?
Are they pulling from TransUnion or Equifax? Do you know?
I'm not sure what you mean.
I've seen them on the Discover
Mhm.
reports, but I've never looked to see.
I would think that they'd be fairly accurate if they're going
And
to
what
put their neck
do
on
you
one.
consider like a lender? What do they consider? I know 800 is
Mhm.
the best, but is like 600 to 700. I mean, where's the poor that, you know?
To have good credit, you're probably going to be wanting to be about 660 or above, 660, 670. Most home loans, they're wanting you to be between the 680 to 700 range now. For the Toto program, I believe they want you in the 640 to 650 range. So that's why I said everybody's a little bit different. But yeah, so yes, ma'am.
I just recently lost my spouse, and he had a credit card,
Mm-hmm.
and I called and closed that account like I should have. And they told me that the day that I called and canceled it, that he had passed. And I said, you know, I will continue making payments until this is paid off. And the man, I don't remember what he said. Well, a week later, it was time to make my payment. So I called,
Mm-hmm.
and I couldn't make that payment because the account was closed. And just recently, I received a letter from a collection agency because they're collecting that debt, which makes me very angry because I wanted to pay that.
Yeah.
And
And
is that going to ding my credit now?
if it was joint, unfortunately,
No.
it wasn't. It was just in his name.
It's his name.
You can't do anything.
Hmm.
If it's an individual account, they shouldn't even be coming after you.
She was a signer on it.
Okay, so you're an authorized user.
Yes.
Yeah.
Yes.
Unfortunately, in those situations, I don't know if you're necessarily liable for that amount that's due still,
I mean, I'm not-
but it is going to show up on your credit report.
But you can call, and if you're just the authorized user, Bureau? Can you have to remove that for you? What did you want?
I mean, I don't want to not pay it, that's not what I'm wanting.
Mhm.
But it just upsets me that they sent me to a collection agency.
Yeah, and I agree.
Yeah, they shouldn't have just taken his name off of the user until the account got paid in full. I mean, that's how it should have been.
So it's,
Closed.
Well, and one of the things you can do, I know you mentioned the counseling. Remember, because of our partnership with HCCI, you get free counseling services. So all you have to do is call them up and tell them, hey, I'm with Stormont, and they'll set you up with the right counselor, whether it be for credit or bankruptcy or housing, so that you can come in and get those free sessions. And they do ask you for your badge,
Yes.
I believe, when
We
you
do
come
receive
in.
a badge.
But it's a benefit that we're partnering with them to offer to you. So in this case, it might benefit to go in and sit down with them and have them pull your report and see what needs to be done.
Okay. Can we also go to the one in Lawrence?
Yes, any of the offices you can go to, they all know the information.
Yes.
So when you guys pull the credit, you still take a ding?
No. When we pull it, it's for informational purposes. It's considered a soft hit. So it will show up under your inquiries, but it's not actually going to hurt your score. So yes.
Another reason to go see them.
I occasionally have something come, or somebody will call me and want to refinance my house.
Uh-huh.
And I say no. Are they looking at my credit report before they do this?
You're talking about pre-approval?
I don't know what it is. They just call me at supper time and say, I'd like to redo your mortgage. But it worries me that every time they call me, they're dinging my credit.
I don't believe so.
Okay.
Do you know?
But they're not digging your credit, but the credit bureau does sell information, and that's where they get it from. Most of the credit bureaus are selling your information, and they'll just give them a general that somebody is between this score and this score, but it's not an actual hard hit. So yes, you're getting your information from the credit bureau, but it's not an actual hit.
So it's not.
No.
I just wish they'd leave me alone.
Well, thank you all for your time, and especially for all of your questions. If you could fill out the backside of that disclosure before you leave, it's an evaluation. I'd really appreciate it. Thank you so much.